To me, it's an overreaction. I mean, NVIDIA decline is the worst since March 2020, and we know that ended up being a huge opportunity for investors. So I think it's not a fun day, but I'd be looking at this as an opportunity. I think financials, to me, represent a pretty good fundamental case of change this year because we have a new administration, a Fed that is dovish, yields that aren't painful for banks, and at a time when it could lead to upside for capital markets activity and multiples are low. So I think financials remain our number one S&P.
Are you looking for stocks that can turn a small investment today into a fortune in the future? What if I told you that two companies could dominate their industries for the next decade and beyond? These aren't just any companies. They're industry giants poised for even more explosive growth. Investing in growth stocks is one of the most effective ways to build long-term wealth. But choosing the right companies is key. Not all stocks have the potential to deliver outstanding returns over time. But some businesses are so strong and well-positioned that they stand out as exceptional choices for any portfolio. Today, we're going to look at two powerhouse companies that continue to dominate their industries: Amazon and Berkshire Hathaway. These companies have demonstrated resilience, growth, and the ability to generate significant returns for long-term investors. So, what makes them such great investments? Let's break it down. First up, Amazon, ticker AMZN. Amazon is one of the largest and most influential companies in the world, with a staggering market capitalization of over $2.46 trillion. It has transformed from an online bookstore into a global e-commerce and technology giant, shaping how people shop, work, and consume media. But can Amazon continue its growth, or has it already reached its peak? The reality is Amazon is still expanding into massive markets with plenty of room for future growth. One of its strongest assets is its Prime membership program. With over 200 million Prime members worldwide, Amazon generates consistent and predictable revenue from its subscription model. These loyal customers drive higher spending across the platform, making Amazon's ecosystem even stronger. In the third quarter of 2024, Amazon achieved its fastest ever delivery speeds, a direct result of its continued investment in logistics and same-day delivery services. This gives it a major competitive advantage over other e-commerce players. And despite generating an incredible $242 billion in online store revenue over the last year, Amazon still has a relatively small slice of the global e-commerce market, which is valued at over $6 trillion and continues to grow. But Amazon is much more than just an e-commerce company. One of its biggest profit drivers is Amazon Web Services, AWS, its cloud computing division. While AWS makes up only about 17% of Amazon's total revenue, it contributes the majority of its operating profits. The demand for cloud computing is expected to rise significantly in the coming years, especially with the rapid adoption of artificial intelligence, AI, and machine learning tools. Amazon has been investing heavily in AI-driven solutions, helping businesses build and scale their applications efficiently. With strong dominance in both e-commerce and cloud computing, Amazon remains a compelling stock to hold for the long term. Analysts expect Amazon's revenue to grow by 11% in 2025, and improving profit margins could lead to an annualized earnings growth of 22% over the next several years. That means Amazon investors could see substantial returns over the next 5 years and beyond. But before we proceed, here's a question for you. What do you think is the biggest game changer for e-commerce in the next decade? Drop your thoughts in the comments. Now, let's talk about another exceptional company, Berkshire Hathaway, ticker BRK.B. When it comes to stability and long-term value, few companies can match the track record of Berkshire Hathaway. This investment powerhouse, led by the legendary Warren Buffett, has grown into one of the most valuable conglomerates in the world. Berkshire Hathaway wasn't always the financial giant it is today. Buffett originally took control of the company over 50 years ago when it was a struggling textile business. But through smart investments and strategic acquisitions, he turned it into a massive holding company that owns and operates a wide variety of businesses. What makes Berkshire Hathaway so special? For starters, it has an incredible amount of financial strength. In 1964, Berkshire had just $920,000 in cash. Fast forward to today, and the company holds a staggering $320 billion in cash and U.S. Treasury bills. This gives Buffett and his team the flexibility to make strategic investments whenever they see an opportunity. especially during economic downturns when other companies are struggling. Berkshire Hathaway's operating businesses span multiple industries, including insurance, railroads, energy, and retail. These businesses generated an impressive $37 billion in operating earnings in 2023, showcasing the company's ability to generate steady and predictable cash flow. But that's not all. Berkshire Hathaway also has a massive investment portfolio that includes large stakes in some of the most well-known and successful companies in the world, such as Apple, Coca-Cola, and American Express. As of the third quarter of 2024, Berkshire's investment in these three companies alone was valued at $139 billion, making up a significant portion of its $271 billion equity portfolio. With such a diverse range of businesses and investments, Berkshire Hathaway has been a reliable wealth-building machine for decades. In fact, its stock has doubled in value over the last 5 years, rewarding investors with impressive returns. One concern that some investors might have is what happens when Warren Buffett is no longer leading the company. After all, Buffett is 94 years old, and many wonder how Berkshire will perform once he steps down. However, Buffett has already laid out a succession plan. Greg Abel, who currently oversees all of Berkshire's non-insurance businesses, is set to take over as CEO. Buffett has expressed complete confidence in Abel's leadership, stating that he is more than ready to run the company and make key investment decisions. This means that when you invest in Berkshire Hathaway, you're not just investing in the businesses it owns, you're investing in the exceptional management team that runs them. This is a key reason why Berkshire Hathaway remains one of the safest and most dependable stocks for long-term investors. Now, let's take a moment to break down the numbers in the chart, because these figures tell us a lot about why Amazon and Berkshire Hathaway are such powerhouse investments. First off, Amazon's current price sits at $237.07, with a market cap of $2.49 trillion, an absolute giant in the stock market. The company generated a staggering $574.78 billion in revenue over the past year, and with a gross margin of 48.41%. It's clear that Amazon is not just growing, it's thriving. This high margin shows how efficiently the company operates, especially with its dominance in e-commerce and cloud computing. Investors looking for strong long-term growth potential should take note. Now, shifting to Berkshire Hathaway, while its current stock price of $469.26 might seem lower compared to Amazon, don't be fooled. Berkshire operates on a different level. With a market cap exceeding $1 trillion, it holds massive value through its diversified portfolio. The revenue figure of $364.48 billion proves that this company is built for stability, even though its gross margin of 21.08% is lower than Amazon's. Why? Because Berkshire's business model is focused on steady, long-term gains rather than rapid expansion. The standout number here? Earnings per share at $49.51. A strong indicator of profitability that reflects Buffett's disciplined investment strategy. So, what does this all mean for investors like you? Well, Amazon is the go-to for those who want aggressive growth and innovation, while Berkshire Hathaway is the choice for those who prefer a stable, diversified, and time-tested investment. Both companies dominate in their own ways, and that's what makes them such compelling options for long-term portfolios. So, what's the takeaway? Both Amazon and Berkshire Hathaway offer compelling reasons to be part of a long-term investment portfolio. Amazon continues to dominate e-commerce while expanding its cloud computing empire, positioning itself for strong growth in the coming years. Berkshire Hathaway, on the other hand, provides stability and diversification through its collection of high-quality businesses and strategic investments. If you're looking for stocks that can deliver strong returns over time, these two companies deserve serious consideration. But remember, investing is all about doing your research and making informed decisions based on your financial goals. Before we wrap up, here's something to think about. If you could only invest in one stock for the next 10 years, which one would it be and why? Let's discuss in the comments. If you enjoyed this video, don't forget to like and subscribe for more insights on stocks, the stock market, and financial tools to help grow your net worth. And as always, this content is for informational purposes only and should not be considered financial advice. Thanks for watching, and we'll see you in the next video.